last part of this TNMM section, we just move on. So right now what we will discuss is the two parts. That is, first is arriving at arm's length price in TNMM dataset. As we already saw in the last example that we arrived at the dataset of TNMM, and then there is an example of segmental profit and loss. I'll just open that file and from that I'll explain. Now, as you saw in the last part as well, there was this example wherein we arrived at a data set under the TNMM. So as you can see, I have computed the margins for this 3 years by using this entire computation sheet, and appropriately I have come up with a data set, and then appropriately we have also computed this weighted average operating margin on operating revenue, which again we need to understand that I have totaled the profit, that is operating profit, and I have divided that by the total amount of sales for 3 years, right? So that is how I have arrived at a weighted average operating margin on operating revenue. Then as the number of comparables are less than 6, so what I have done is I have derived an arithmetic mean of this all comparables. Now we go ahead. Now if we presume that there was this 4.5 crore rupees of purchase which has been done by the taxpayer from its AE, right? So as what PLI we will select is, as this is a tinted base, that is the base which have a control transaction. So we won't go ahead with the operating profit on operating cost. What we will select the base is operating margin on operating revenue, which is 6.44%, because that is predominantly the base which is free from the control transaction, right? So that is what we will take. Now we come to the computation of TP adjustment part. Now as you can see, we have presumed here 4.5 crores of purchase transaction value, right? Now under this part, the arm's length margin which we derived on the operating, so operating margin on operating revenue is 12.42%, right? That's an arm's length margin. Now we go ahead and we understand that what was the OP and OR by of the taxpayer entity. Now that is 6.44%, right? So this is 6.44% was the operating margin on operating revenue. This was operating margin on operating revenue of this taxpayer entity. Now the differential margin that this entity needs to earn is 5.98%. That is the difference between 12.42 and 6.44. Now the actual operating revenue of this entity, if we just go ahead, we can understand that the entire revenue part was 33.66%, on which 33.66 crores, on which the margins, the differential margin will be computed. So the amount of adjustment that would require would be of around 2 crores. That is, by 2 crores its profit loss account needs to be increased, and appropriately so the adjusted this amount will be adjusted to the transfer price, and post the adjustment the value of the purchase transaction will decrease from 4.5 crore to 2.49 crores approx, right? So that will be this this will be the revised ALP. That is how we compute the ALP under transactional net margin method. I hope that clarifies. Now I'll just move ahead to the other part wherein we discussed about the segmental profit and loss account, right? Now under segmental profit and loss account, what you are required, so this is a generic segmental which I have prepared for some party. What you need to do is when a case comes up to you and as a CTP consultant where the party is undertaking a same transaction with unrelated parties also, and the same amount of transactions are being taken, same nature of transaction is being taken by your taxpayer entity with the related party also. So in such cases you may come up with a segmental profit and loss account. So it may be, segmental profit and loss could be in any scenario. Under this scenario, what we have presumed is that the party is selling the goods to the related parties as also the similar type of goods to the unrelated parties. However, the goods are customized party wise, and that is where we cannot go ahead with the cup, and that is where we have arrived at a transactional net margin method, and appropriately we have prepared this segmental profit and loss. Now first of all, first thing that you need to ask for segmental profit and loss details from your client itself. You don't have to presume things, right? There could be basis of this allocation, but you need to stress upon the client, and you need to ask him that you need to give that, you need to ask client for the segmental profit and loss from his end only, rather than you computing the segmental profit loss from your end. But in case if client is not able to allocate certain expenses or revenue items apart from those are which are actuals, then you may guide the client to adopt a appropriate allocation basis. Now whatever the basis which you may advise the client for which the segmental needs to be prepared, you should keep in mind that this all can be challenged by the tax authorities, right? It is not in the hands of tax, so it is not the tax authorities are not bound to by any of the provision to accept your segmental analysis. Tax authorities may compute the arm's length price with the by ignoring the segmental analysis also. But as a transfer pricing consultant, you should arrive at the best and the reliable result through this segmental profit and loss account, right? So here what we have done here is that we have segmented the profit and loss account into two parts. That is that the portion which we can allocate to the sales made to the unrelated parties, and the portion which we can allocate to the sales made to the related party. I'll just quickly go through the each and line item and what I have used. See, you are not required to use the same thing, right? This is just for a reference only and information purpose only. But in case if you think that it is more feasible to have you to choose a separate allocation basis, you may go ahead and choose that, but have the justification that why you have chosen that particular allocation basis and how you have prepared the segmental profit and loss account, right? And also in case if you are also taking the segmental info from the client, I would also request you to take that particular thing under your representation letter, which you would be required to take from the client at the time of signing of form 3 CEB, right? So it should be that client has given you all the data and appropriately you have factored that data and analyzed your transfer pricing, have done your transfer pricing analysis. I hope this clarifies. Now I'll just go item to item. So first is sales. So sales would be at actuals. Obviously you have to separate this sales at actuals. This cannot be allocated basis on certain assumption. Then other incomes which are not directly, which cannot be linked to this sales directly to any of the party, that is unrelated party or related party, then you can go ahead and allocate on sales ratio. See, this is what I have allocated in one of my case, and that is what I have presented here to you. But in your case it could be different. You are not required to follow this particular allocation basis, right? Then after cost of material consumed, it could be at actuals, and if they are not able to derive that part, then an appropriate COGS ratio they will give, and you can allocate basis on certain ratio. They would have this ratio of output. Now whatever they have consumed to produce that particular good which has been sold to related party and unrelated party, they would have that ratio, and that they would have given to you, or in my case they have given me this ratio, so I was able to allocate that particular part of expenses, right? Then purchase of stock in trade. Now this was for a purely unrelated party what they have incurred these expenses, and that is where I have allocated that entire expenses to the unrelated parties. You may understand from this how the allocation is happening. Now changes in inventories and finished goods. This is again should be at actuals, or if that is not available, you can use some appropriate ratio and arrive at your figures here, right? Then employee benefit expenses. Now if the employees were directly related to the factory operations, then the allocation is on COGS ratio, and for the admin employees, admin, sales, HR, this employees, a sales ratio I have taken. I hope you can understand how easy is this getting, right? So financial cost, so this cost would not include the interest but the bank charges. Now if the bank charges are towards the export of goods to the related party, then you may allocate appropriate amount here rather than getting into the sales ratio part. So you need to stick to the actual part if you are getting that data. If it is not practical to get deep dive into that part and get the actual data, then you have to practically assume that what type of ratio you will use to draft this segmental, or what your client can use to draft this segmental. Then depreciation, that is on fixed assets, on COGS ratio, and on other non-operating fixed assets, it's on sales ratio. So this is how allocation can be made, going deeply into that part. Then other expenses, as what is the nature of expenses, you need to allocate appropriately as per COGS or purchase ratio, and as per the sale ratio, whatever the expenses are like freight, consumption, repairs, power, fuel, etc. All such expenses are to be allocated in appropriate ratios. Where there are admin and HR expenses, or where there are sales travel being made by the people, you can allocate that. So a sale travel would not be made for associate enterprise, right? Because you don't have to market things to your associate enterprise. So if you see here, the sales and promotion expenses would have been directly allocated to the unrelated party. Similarly, in case if there would have been bad debts, then I would have allocated that to unrelated party, because in this scenario where you are dealing with AE, generally we don't see bad debts with AE, right? If there would have been bad debt or written write-offs, then you would have reported here, that would have been reported here, right? Then provision for doubtful trade receivable. Again, this is a non-operating expense, but for segmental part, or probably I must have taken that position that this is to be included right now in profit loss, so I have included that to the related party. Correct, but this is a non-operating item as we saw earlier. It's there here in segmental, so that it matches the profit loss account also. Probably for that perspective also I would have taken that. So now if there is a net loss on foreign currency transaction, then it's on export sales only, and that's where I have allocated that particular part of portion to the related party, right? And this is how that entire segmental has been prepared. What I wanted to focus on this marketing part expense and more sort of traveling convenience for sales. So such type of expenses are done for exclusive unrelated parties only, and that is where such type of expenses can be allocated to the unrelated parties. I hope I have explained the segmental profit and loss. This is how you have to draw up the segmental profit loss. This is my method of drawing a segmental profit loss. You can have your own method to derive the profit and loss. And what we will do is, after segmental profit loss, we will compare the profitability. Now, if suppose the operating profit by operating sales from the sales made to unrelated parties, the segmental margin works out to minus 11.89%, while in case of sales made to related party, that works around 0.14%. So we can very well conclude that when the taxpayer has made a sale to related party, it has earned a net margin of 0.14%, vis-a-vis it has incurred a loss when it has made sales to the unrelated parties. And appropriately you can justify that it is at arm's length. Why? Because it is higher than the arm's length price, right? So technically, as it is it has given me a higher return. The tax authorities won't go ahead and the tax, I can always say that, and if the tax authorities accept this segmental, I can always go to the tax authority and say that I have appropriately earned at arm's length only, because my margins from selling the goods to the related parties are quite higher as compared to the sales which I have made to the unrelated parties of the similar or customized product. So this is how your T&M part is over. I'll catch you in the next video where I'm discussing the other method. I'll catch you in the next video. Thank you.